Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky, a Vancouver-based realtor who you can find online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure.
Steve, are you seeing activity downtown in Vancouver?
I think that's the slowest market overall in the greater Vancouver. So obviously there's a lot of, media headlines. Everyone's talking about the housing boom during COVID. But it certainly isn't taking place in downtown. I think that there's this notion that nobody has to go to the office anymore, obviously with a lot of the offices being downtown. So people don't feel the need to be in the downtown core right now, and tourism's down, so that's kind of impacting things. So, and I think with the COVID trend is everybody seems to want more space, and the thought of being, in a in a smaller condo downtown and, high rise waiting for elevators, that sort of thing seems to be kind of impacting the psychology of the market there. So we're seeing a significant slowdown in that segment of the market.
What about out in the suburbs?
Yeah, so this is kind of an interesting phenomenon, which I highlighted on my Twitter feed there. But so if you look at, so for example, the downtown Vancouver condos sales, for example, in July. So if you look at sales in July on a year-over-year basis, downtown Vancouver condo sales were down 18%. If you look at single-family house sales in the Fraser Valley in the suburbs, sales are up 56% year-over-year. So there's been a drastic divergence in the market where basically people are moving further out away from the city. They're looking for more space and better value as they work from home. And so we're seeing all of the activity, or a good chunk of the activity, seems to be concentrated in single-family homes, particularly the further away you get from the city.
Do you think Vancouver, with its quest to pack everybody in together, may be bucking an international trend where it seems people are leaving cities, and a lot of the time, too, it's the tax burden, because look at Vancouver every year. If you're a homeowner, you get slapped with an 8 or 9% tax increase. Maybe out in the burbs, it's not so onerous.
I think that's definitely a shift that's not just happening in Vancouver, but it seems to be happening across large parts of North America, particularly, if you look in the U.S. People seem to be migrating towards more affordability, lower taxes, and I think that's, we're seeing a little of that here, at least locally in Vancouver, where, people are shifting away to where they can get a little bit more value, a little bit more bang for their buck, where the tax burden might be, slightly less. And I think that's certainly seems to be a bit of the trend right now.
The venture stock market in Vancouver has been bullish lately. Has that resulted in the buying of homes, especially in the high end?
I can't speak on that behalf, no, but we're seeing a lot more high-end stuff. You're seeing some stuff in the British properties selling around the $10 million mark, which we haven't seen that for probably 4 or 5 years. So we're seeing some high-end luxury house sales are starting to move. From what I understand, it seems to be a little bit more local-based, some guys from Hong Kong as well. But, you're seeing some of that high-end luxury moving. I think a lot of it is a shift towards real assets as central banks rapidly devalue the fiat currency.
With part of the economy still locked down, where's the money coming from to buy homes?
I think it's people that haven't lost their jobs. I think somebody put it succinctly, calling this the Gilded Depression, where the economic numbers are horrendous. They're terrible, but at the end of the day, is the federal government, central banks are pumping massive amounts of money into the economy, to households, to businesses. And that seems to have done, for the most part, at least today, has kind of tapered over a lot of the pain.
We'll have more with Steve Saretsky right after this.
Value from success. growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Steve Saretsky. Steve, did the banks get bailed out of their mortgages by CMHC?
Well, the CMHC upped the program there, the Insured Mortgage Purchase Program, which they used in 2008, 2009. They brought that back during this pandemic, and there actually has been very, very little uptake. I think they've only used about $6 billion worth of that program. And that was all basically done, I believe, in the first month it was unveiled. We're actually seeing a lot more purchases from the Bank of Canada, buying up a lot of Canada mortgage bonds. I think those have increased. The last I checked, the holdings of the Bank of Canada mortgage bonds have increased by 30x. And so I think that's where you're seeing a lot of the liquidity that the Bank of Canada is intervening to suppress the yields on that product. And that's allowing, borrowing costs for the banks to stay low and to keep yields down. And obviously, we're seeing the ultimate end result of that, long story short, is you're seeing 5-year fixed mortgage rates down to around 1.9% today. So central banks have certainly done their part in suppressing, the market rates.
Does the CMHC seem to be worried about Canada's real estate?
We've obviously seen CMHC's Evan Siddall, president there, come out. He's been very vocal. I think I commend him. I think he's got a lot of courage, and he's obviously speaking up about an unsustainable debt burden that we have here, and an unsustainable, at least real estate market that we've kind of built up here. But I think at the end of the day, he's going up against a system that is simply much larger than the CMHC and much larger than himself. We have built an economy that has been created on selling each other ever more expensive homes, and everybody seems committed to ensure that system will continue. So I understand CMHC's concerns. I certainly agree with them, but I think they're fighting an uphill battle here.
Are interest rates likely to remain low for a while?
I believe so, yes. I'm very, in my personal opinion, I think that they will. I think that central banks have come out and been very vocal discussing yield curve control and doing basically whatever it takes. And I think anybody that thinks these balance sheets are going to normalize, I think, are out to lunch. I think that we've gone much further past the point of moral hazard, and I think central banks will continue to play a large component of financial markets. I think the balance sheets will continue to grow, and I could see the ultimate goal when you have this amount of debt in the system is that you have to keep real interest rates negative. You have to. So unless otherwise the system essentially implodes. So in my opinion, I think that I could very well see rates going to zero.
We'll have more with Steve Saretsky right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, has mortgage deferrals and are we likely to see inventory increasing?
I think logically and rationally, but I don't think there's a whole lot of logic and rations behind the housing market. As we can see now, I don't think there's probably a lot of people that predicted at the start of the pandemic that you would see multiple offers on houses and prices rising. Pre-COVID, you have houses prices up, I'd say, from pre-COVID to where they are today. I think house prices, I would say, are up about 5%. So there's not a whole lot of logic and rationale behind that. So, we talk about this mortgage deferral cliff. Again, I'm very cynical of the, policymakers taking the moral approach of, letting bad debts become bad debts and then those being realized. I suspect that they will probably work with mortgage deferrals on a case-by-case basis. They may even do an extension. We've recently seen, for example, the Australian banking regulators have just extended mortgage deferrals from 6 months now to 10 months. And so I think that, the reality is I think we'll probably end up going down a similar path. Anyone that believes that, the government's just going to go after this is all said and done, that they're just going to put their hands up and just let it ride. I am very skeptical that that's going to be the path, that policymakers, all levels of government, have clearly shown that they're willing to do whatever it takes. And again, I think you could certainly debate the morals of these programs, but I think it's evident that we've kind of opened Pandora's box in the fact that these guys will do whatever it takes to try to come away with their objectives, and their objectives are for nobody to feel any pain and to keep asset prices elevated. So again, whether or not they're successful in that is anybody's guess, but I am very skeptical that they're just going to let a whole bunch of mortgages roll into foreclosures and they're going to crush the housing market.
In a recent interview with Alan Mark Angel, you mentioned there's inventory waiting to hit the market once the fear of COVID-19 is gone. What are you hearing?
Yeah, that's one of the things that I've been talking about. I've been quite vocal about. I said, everybody's talking about pent-up demand, but nobody's really talking about pent-up supply. I think there is a lot of pent-up supply that will be coming, and I do think that that will push, the recent burst of activity that we've seen. I think that will slow down. I don't think the current pace that we're on is sustainable. I think that we're seeing, obviously, so for example, in July, yes, we had a huge jump in sales. We also had a massive jump in new listings. It was the most new listings and the most sales for the year in July, year to date. So we're seeing basically an increase in activity. I think there's a lot of people that have, for example, investment condos, pre-sales that are going to be closing that maybe again they were hoping to flip or they're hoping to rent out, and obviously that market has changed. So I do believe that there is a number of investors that will be caught offside, over-leveraged, and they will add supply to the market. And I do think that's going to put a damper on things. Now, again, whether or not it's going to be enough to flood the market and crash it, I think is, remains to be seen. But I certainly think that given where inventory levels are today, I do see them increasing. And I do think that we will see foreclosures will increase. That is inevitable. But I do think that the deferral cliff will be mitigated and won't surpass our initial fears.
Do you know of people who could have afforded to pay their mortgage but instead took the deferred mortgage and are tucking away the money they would have spent on the mortgage into their savings account or buying other things?
Tons of people. Tons of people. Tons of people. I think that's 60% of mortgages were in deferral. And again, we don't know. Nobody knows the exact number of how many of those are actually under distress and needed it, and how many were simply taking advantage of the system. But I certainly know of some individuals that are very well off and that were taking advantage of that program. So it is what it is, and I suspect that the banks will take a more stringent look at who really needs it as these deferrals come up, and I think that's something to keep an eye on.
Of course, one of the reasons people get to be wealthy is they're really good at moving money around, and perhaps the banks won't know that you don't really know it.
Yeah, I mean, I think that, there's smart individuals for a reason. They made their money for a reason, and they know they know where their opportunities are in the system. And again, you can debate the morals of some of these, individuals that taking deferrals when they don't need them. But at the end of the day, if the bank is willing to vet them properly and they just give them to everybody, then it is what it is.
And we also had government officials complaining that nobody was saving money. Well, this way you can top up your savings account for a rainy day for when you really do need the money. So why not take advantage of it? You're just, doing what the government said you should do, maybe save more.
Yeah, I think it's the same way in Vancouver with people deferring their property taxes. I know tons of wealthy people that you can surely afford to pay their property taxes, but they're deferring them because it's a 1% interest rate. That's less than the rate of inflation. So, these programs are set up by the government, and they make them readily available to people, and there's people that know how to take advantage of that.
All right.
Again, it is what it is. If it's within the rules and the guidelines, then there you have it.
And in their effort to help out, government does several things. The late Prime Minister John Diefenbaker said it best when he said, government is doing skillful surgery with blunt instruments.
Yeah, exactly.
Steve, thank you so much for chatting with us.
Yeah, thanks for having me on, Jim. Appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor who you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.